So it's an interesting thing. Normally on Wednesdays, I like to host an interview where I reach out to someone in the world out there in the trading sphere to discuss the stock market, their trading strategies, their backgrounds, life, love, happiness, all the goodness. And today is an interesting day because the market is down a lot. And I have been watching it very closely, but I haven't taken any trades yet. So this might be the absolute perfect time to bring on Gene Munster. A lot of you have likely seen Gene on CNBC. You've heard him on Benzinga numerous times. He's very popular on Twitter. Here's his Twitter page, Munster Gene. So Gene, are you able to hear me okay?
I got you loud and clear. Can you hear me?
Yeah, man, you sound like a gem. All right, buddy. So Minneapolis, Minnesota. How long you lived up there?
It's been home for a long time. Was born here, lived on one coast, then moved to the other coast, and then came back here maybe a decade or so ago. And so this is home. You're not a Detroit person, are you, Jeremy?
Nope, I actually live in Nashville, Tennessee.
Love it. That's where everything is going on. Nashville, mark my words, that city's going places.
I agree, man. I agree. I'm in it to win it for sure. If you ever come down, man, make sure to hit me up. We'll go get some food.
Love it.
Yeah. So fill us in on your trading background, Gene. You've been doing this for a long time, man. How'd you get started?
So I started a long time ago as an equity analyst covering tech companies, and that evolved to covering starting with some small companies and then to a lot of the internet companies, larger internet companies. Covered some China internet, and stayed large cap tech. Essentially covered FANG, and then 4 years ago, with the team that I work with, we spun out and started investment firm ourselves, Loop, and we've been doing that. We're spend keen attention to trading, but we are a little bit more longer term focused in our investment style. And so that's our approach. But we love interacting with the trading world because it keeps us sharp.
Yeah, I love that, man. Well, that's gonna be phenomenal. Kind of pick your brain about some of the longer term stuff. But when you're doing analysis like that, what's some of the main things you're looking for?
So our kind of underlying theme is our underlying guidepost is for transformative tech. And so when you think about companies, we tend to think which ones are going to fundamentally change our lives. It's kind of an easy example to look at what's going on with FANG is in two companies in FANG, Facebook and Netflix. If you look at their world, their kind of outlook for the next 5 years is largely the same as what they've been doing for the last 10 years. And so those two would not be considered like transformative companies. But on the other hand, if you look at a company like Tesla, or this is all in the future, we look at Apple, where they're going around health, wellness, augmented reality, Google with their other bets, Amazon with logistics. These are kind of ways that they're going to transform. So that's to answer your question, the way we look at it is we anchor in themes that directions that are going to be very disruptive, transformative, and then we try also to be contrarian too, and think about areas where it may not be consensus that something is going to happen.
Gotcha. Okay, I like that. I mean, the transformative tech. That's how you have those huge, massive winners. If you're able to catch, honestly, just one or two early on, right?
Exactly. And I mean, our experience is it's difficult to predict how long the timing it takes for this transformation. Sometimes it happens faster than you think. More often it takes longer. It's difficult to predict that, but it is. And that's in some ways what can make it more challenging to trade some of these macro themes or some of these transformative themes is because take a company like Zillow, for example, and they're going to disrupt real estate, but it's hard. You can see where they're going to be in 10 years. It's hard to see what the year to year looks like. And so that would be an example of another company that we feel is in a good spot longer term.
Yeah.
But near term, who knows? I mean, same thing with Tesla. Like the near term, a lot of times it's really tough. I would just love to get your take, ask your take, Jeremy. Tesla is a company that we've been long involved with, big believers in it. It's come together faster than what we had thought. But would love from like a trading perspective, you look at that chart, what do you think about?
So yeah, great question, man. I am a extreme bull on Tesla long term, and from a technical chart, it absolutely needs to trade sideways a little bit longer. I mean, this was a cataclysmically parabolic run up. That you're right, it was really unexpected. I mean, it happened faster than I think any other company ever at that
Mhm.
size. You know, not like a random biotech or pharmaceutical company, but an actual legit company. That was such a magnificent run up for such a long time. So I think this consolidation here makes tons of sense, where we're going to probably hang out for a few weeks, maybe even a month or two going into 2021. And then from there, I would assume the trend's just going to continue, only because, I mean, we're talking the solar panels, the power walls, the grid, especially if Biden gets elected. I think that there's going to be a lot more emphasis
Yeah.
on, as he's mentioned, he's been talking a lot about like the solar charging stations and power stations. I mean, that, and Tesla has that on lock right now.
Yeah, that's great perspective. That something else, if you just keep that chart up there on
Mhm.
with Tesla too. You know, I mentioned, and you know, it just happened kind of faster than what we'd expect. That is one perspective. There's another perspective that if you look at from 2016 to 2019, the stock it moved, but it really didn't capture all the good things that were going on there. In other words, that wicked jump in the shares over the last year is, you know, maybe was the result of the fact that the company wasn't getting credit for 3 years of making progress. It was just such an emotional, still is an emotional story for investors. But there's this
Yep.
period where they were just crushing the auto industry and EVs, and people were worried about them going out of business. I remember uh, I just love doing feet on the street research. I stopped at a Mercedes dealer just to see what they'd say about Tesla, and I was talking to a salesperson, said I'm considering buying a Tesla. This is about a year ago, and he said
Yep.
highly recommend against it. The company's going to be out of business in 6 months.
Oh,
So when you see these emotional kind of moves, we get excited about that because usually, of course, when you get too many people on one side, the opposite happens.
yep. That's exactly right. Exactly right. And the big question in this realm would be, how do you know when to hold a move like this? I mean, that's the really big question, is how do you create that plan ahead of time?
From our Tesla's a great example. Maybe some of the reasons why I'm not a good trader. I've had success with the long-term investing, but this is a story. You know, you talk about kind of consolidating over the next few weeks, few months, but you know, I could envision, uh, you know, the stock being down 20% in the next 2 months. I could also envision
Sure.
on a Biden election, it's up 20%, and so
Yep.
it is. It's just really, I think, with some of these emerging companies, it's difficult to predict quarter to quarter about how it trades.
Yeah. So, I mean, how do you hold through those retracements? Because in order to be a long-term investor, you have to. I mean, Apple has had what, 19, 20% or more drawdown since 2000, something of that extent.
Yeah, that's a great. I didn't know that. I suspected a number not that high, but it's it maybe said in a different way. There's been 20 times when a long-term investor would have said, "Hey, this feels like it's over." And
Yep.
how do you ultimately trade that? And I don't have a good answer. I think that um, you know, the our guiding principle is we try to triangulate a value longer term, and sometimes it's based on like in Tesla's case, it's based on what the addressable market is and potentially how much share they could have of EVs, and then some of these other businesses you mentioned, Powerwall, there's insurance, autonomy, all these.
Yep.
And so how do you get around that? I think there's some patience. There's also the perspective of just holding a core position and then trading around the core position.
Yep.
So, if it, like, for example, if it, you just have your kind of windows and say, if it doubles over a certain period of time faster than what I thought, then I have a discipline of taking money off the table. And then if it pulls back, I've got a discipline of buying more, kind of that dollar cost averaging, because ultimately, if you make the right long-term call, you can really juice your returns if you can optimize around that core position.
Yep. That was a very, very key statement. Fill me in, man, on your thoughts on solar, because with energy just getting absolutely rampaged over the last, while, 4 years minimum. What are your thoughts on, is solar going to finally come back? Is this something that's actually going to be making bounds again to start increasing?
Yeah, it's fun. It's crazy. I remember being an analyst covering large cap tech and hearing about what was going on in solar, kind of that 2007 to 2008 timeframe.
Yep.
It was Bitcoin, and my sense is that again, you kind of go back to, we describe them as undeniable truths, and is the world, and we try to envision what the world's going to look like in 10 and then 20 years. And if we think about that, I think there's a strong case that solar is for real. And the good news is that solar is riding a tech curve where gas and oil is not on a tech curve. In other words, is that there was some innovation in kind of traditional energy around like fracking, for example, but for the most part, it's the same business. You drill, you refine, you transport, you consume. In the case of solar, there's obviously a desire for renewable energy, but what I think is more powerful is just the cell density, the yield that you're getting on every square foot of a solar panel is improving faster. So that rate of improvement's increasing. So think of it as like a typical year, you'd see about a 7% improvement in yield. Now you're seeing greater than 10%. And what that means is that it gets easier and easier to run your home or a business with solar. There's another factor that is kind of below the surface on why solar is real and why it's going to become a bigger part of our lives, is everything below the roof is also going through a transformation, becoming more efficient, which makes solar more reasonable. The best example is what's going on with heating and cooling, your HVAC. Historically, HVAC has been the part that really breaks a consumer's ability to go just solar. And so by making those more efficient, Tesla's going to get into the HVAC business eventually, but by making those more efficient, it allows you to actually disconnect from the grid, whether it's a business or a home. And then you have the declining prices of solar, the improving aesthetics of solar.
Yep. That's a big one.
That's an important part. And I think when you put all this together and you just think about where the world's going, hard to predict, again, when that inflection point is. Tesla describes it that half of their business eventually is going to be solar and batteries. And today it's 7%. So
wow.
To get there, one last kind of fun detail around that. They're growing their auto business at around 40%, 40. And so if you're at a 7% business today for their energy generation, their solar energy and storage, to get to half, you need to considerably outpace what's going to be 35% auto growth for the next 5 years. So maybe said a different way, if you'd ask Tesla, they think solar is going to grow at 100% for the next few years.
Mm-hmm. I mean, the thing is, Tesla, they do make vehicles, but I would not classify them as a car company.
Totally agree.
You know, it's almost
well said.
It's hard to exactly put in words, but it's in a way how ExxonMobil and BP and all the energy companies, like where you pull up to the gas pump, that's the Tesla. Like you interacting with the gas pump is the Tesla, but everything behind the scenes is actually what Tesla is.
Love hearing that. I
Yeah.
think it's still misunderstood, that perspective. And, I would add to that too is, most people think of Tesla, like you said, as a car company. It's really not. They describe themselves as a manufacturing company. That's their violin concerto, the thing that they're world class at, which is ironic because all the manufacturing problems they had for a long time. But I think what is really going to kind of dominate investor thinking on the Tesla story over the next 5 years is going to be their ability to take existing tech and apply it to new markets. We talked about HVAC. So they have existing tech around heating and cooling inside a car, and they can apply some of those same learnings to build an HVAC system for the home. Another example is applied learnings around their autopilot and the ability to better understand how to insure a car, create lower expense on insurance. It's a high margin business that they potentially get into. We talked about energy. There's full self-driving. There's this is going to discredit me, but there also could apply some of what they're doing in cars and batteries to potentially flying taxis. And that's, you just think about the world. We have this world. What's the world going to look like in 100 years? And flying cars, perhaps. For that to happen, somebody's actually got to do it. We can't. It just doesn't happen by years passing. And Tesla is in a position where they can start to advance something as far out as that may seem. They can start advancing that.
Yeah. So you're a really good point, man. And you're right. I know that's been like a fictional, 1980s, we're supposed to have flying cars now, but at some point that vision will come to fruition. Just kind of depends on when. And switching gears a little bit, what is your opinion on why Chewy and Etsy are doing so well? And a lot of people thought Amazon was just going to totally eat their lunch.
It's all just about brand affinity and really knowing the customer. And those are good examples. I mean, we think about a specialty retailer as what Chewy and Etsy is, and Amazon as a mass retailer. And the success that Chewy and Etsy have had has been in part because of the success that Amazon has had as a mass retailer. It has been the opposite. It has not been, they have not eaten their lunch. What has happened is Amazon has stood for wide selection and convenience. And they're doing a great job with that, but that's not your entire wallet. And if you look at Etsy, what really Etsy is, it's a reflection on your personal brand. A lot of times it's the little things in your home, potentially jewelry. There is kind of that creative aspect. That's not Amazon. And when you think about Chewy, you think about a family member, a pet. And that is not Amazon either, kind of getting, just dialing that in, just great. So we've seen that road was traveled well before diapers.com, which eventually was acquired by Amazon, was a good example of a company really taking an angle, a niche, and a specialty, and really competing exceptionally well. And Amazon tried really hard to win in diapers. And you'd think diapers, like, who cares? Diapers is, you throw them out. But it turns out that moms love the service, and they really felt a brand affinity to diapers, and it was a great outcome for diapers getting acquired by Amazon. So I think that those are the reasons why Chewy and Etsy do well, is that specialty. And that's one of the big risks to Amazon, is that people just get tired of it, fatigue and tired of the boxes. And I think it's a very small risk, to be clear, but that's that kind of risk creates opportunities for other retailers.
Yep. Yep. No, that makes a lot of sense. What other industries and or sectors are you keeping an eye on for disruption? We've mentioned some of the big ones that have transpired and transgressed over time, but what else are you keeping your eyes on?
Well, one of the big ones that's worth still talking about, I think, is what's going to happen with Apple. And when you think about investing, when I think about investing in Apple, there's this initial, I think, understandable apprehension that it's a real idea, because great stocks, great investments need to be something that is like undiscovered, like I knew about it before anyone else, and of course everyone knows about Bang. So as a starting point, just because it's well known, I think doesn't mean that it can't have some nice upside to it. And I think one of the two pieces that are very obvious about transformation that Apple has not been a part of, and over the last 20 years, but will over the next 5 years, is what's going to happen with 5G and the significance around new forms of computing, that they're going to be a big beneficiary. 5G is going to take time. The initial year is going to be a disappointment. The speeds aren't that good. But in 3 years, when we get to full 5G capability, it's called the third layer, or the high band.
Yeah.
You start to get to a new way of your phone. The processing happens in the cloud. Your AI happens in the cloud. It takes some of the work off of the phone, and the apps, the things that you can do on your phone just get to be much more compelling. And so, and not only that, Apple can benefit from, so that's a tailwind for Apple, 5G, not just around phones, but around new applications that they'll benefit from, developers building new apps, Apple getting a cut of those sales. And then separately, what's going on health and wellness. And it's still what's happened with Watch. It's a fascinating story. When Apple Watch came out, before it came out, a lot of hype about where it was going to go. Ultimately, it was a disappointment for the first few years, and now has found its place kind of in wellness. And it's still only about 8% of iPhone owners own a watch. And that number could be 50% over time. And so I think that wearables is a big category of health and wellness. And so that's Apple. And then, you think about other areas you just kind of look around the world and say, what are other massive areas of disruption that can happen? And I want to caution, these are not endorsements to owning these names. This is just simply an observation about areas that are ripe for disruption. But when we think about real estate, we talked about that. Redfin, Zillow, Open Door is which is a competitor to both of those, is going to go public, probably through a SPAC. Those are just massive opportunities to be able to take what historically has been an industry with a lot of friction. And this is people's, a lot of their net worth is involved in their home. And to be able to add some visibility around that, and I think is a powerful opportunity. And so I think that's one area. And another one is just what's happening in commerce and e-commerce specifically. And you look at, it started in the US, then it went to China. When China was starting to take off, there was apprehension about fraud. There was apprehension about, do people actually, are the consumers ready for online buying with phones? And then that took off with Alibaba and JD, and then South America, Latin America happened, and people said Mercado Libre, it was fraud. Consumers aren't ready, and that Mercado Libre has done exceptionally well. And then you have then kind of the Pacific crest with I'm just blanking on the name of the company, and C Limited, I think it is C Limited.
Yeah.
And that one is also playing around these commerce themes. And then you say, okay, we saw it in the US, we saw it in China, we saw it in Latin America, we've seen it in the Pac Crest. where else are we going to see it? And I think there are two big regions. Africa is an opportunity. And I think just some of the noise around Jumia is, just shows you the uh, how dysfunctional, I'd say, investors' view is of this region. I look at it as this is primarily Nigeria. Jumia is primarily Nigeria. It's not Africa, the continent.
Mm-hmm.
Nigeria is probably one of the better countries, if you, with all due respect, it's just economically one of the better countries in Africa.
Yep.
And so, this to me is, right now, it is in a vortex of traders, which adds a lot of, it's hard to really get back. I think it's a great case for saying, what is the underlying value? Right now, it's about $1 billion market cap. But what's the underlying value for one of the larger players, e-commerce players in Africa? And again, I'm not endorsing this name, but my suspicion is that it's worth more than $1 billion.
Intriguing. So as a long-term investor, Gene, do you short anything ever? Do you have bearish positions?
No, I don't. And part of the reason is we don't spend time. We talk about shorting companies. We don't actually do it. There is sometimes, it's when you think about these as transformative, it's sometimes equally as easy to see the other side, like who's going to be negatively impacted. I'll give you an example of one that I've been wrong on. Haven't shorted it. This is not an endorsement to short this company, but if you think about what's going on with autonomy and what Tesla's talking about with their trucking and fleets and platooning and potentially logistics and adding a layer in there, you think about a company like C.H. Robbins, which is kind of a freight logistics company, and they have, I think, a challenge ahead of them in terms of trying to compete with an autonomous world. I've never met with the company. I owe them that when I'm making comments like this, just to hear them out. I suspect that their view would be is that they want to have a play in autonomy, and separately, it's going to take longer than you think. And that to me is the same logic that like DVD players, DVD. I think about Outer Wall, and when that was Redbox. I don't know if you remember those in the grocery stores.
Yep.
Are they still around? Are there still those DVD
Still
rental
around.
things?
Yeah, man.
Okay.
Still around.
But like that's an example. Or you think about GameStop. Like their bull case argument is it's going to take longer for our ice cream to melt than people realize. And maybe there's a case to trade around a name like that and then capitalize on maybe too much negativity. But I think that ultimately, those are just some challenging businesses. I don't know what happened to GameStop. Maybe they went all online or something. But it's been a wild ride for these companies where you can kind of see the writing on the wall.
Yeah. Gotcha. So Gene, what does Loup Ventures do exactly? Are you guys just an investment podcast or what?
We have a fund, and we are just starting raising money on our second fund. It's a hybrid fund where we look at investing in late stage private companies predominantly, and some less known public companies. And it's kind of a focused approach, 10 to 14 companies, and we want to find those transformative 10x opportunities. And so that is what we do. Is we do what we've done for a long time, which is identify emerging companies that became massive, and played on kind of these long-term transformative undeniable truths. So that's what we do, is we want to really put a long-term stake in the ground, 7 years, and build towards that.
Got it. Very cool. Very, very
I would love, Jeremy, I'd love before it's a crazy day today on the
It is.
markets.
It is.
And what does somebody like you, who's watching things more minute to minute, day to day, what do you make of this? I mean, it's a difficult question, but would love your high level. I mean, is this all about pandemic and how we feel about pandemic? Is it stimulus? Is it all the above? What's your
It
take?
is. Yeah. For right now, it's all the above plus the election. I think,
Election?
yeah, I think in general, this volatility is relatively expected, just coming up into uncertainty, because the market does not like uncertainty. So are we going to get a stimulus? Are we not? When's it going to happen? People need it. The second wave of Corona and or third wave, what does March and February and April look like of next year? Are people going to be working? Are we going to be at the house again? Is the global economy going to get shut down again? So you're going to cause a lot of volatility. For me, I actually do love long-term position trading. It's one of my specialties as well, Gene. And that's where I
Love
kind of
it.
focus on big companies that I like a lot. They're going to have really massive innovation, good sales, good growth, really good leadership, and are going to have most likely some type of exponential growth into the future. But then from there, I'll also scale back and I'll do shorter term trades just by looking at a chart and seeing some really, really clear and obvious signals. For example, since we're looking at it on the screen, this double bottom on the broader market. I love chart patterns. I love candles. If I can see a really, really clear signal, I'll play it, and then just try to carve out some short-term wins. And then from a day trading perspective, day trading to me is also just a way to create potential cash flow, again, around some of your long-term core positions.
Yeah.
I do love long-term investing, but at the same time, I also like money.
Yes.
So I want to figure out a way to kind of carve out some gains faster, or at least get some cash flow, because long-term investments, as great as they are, like you mentioned earlier, when you can trade around them, you can, or at least do have the ability to create some cash flow, especially if you're using options.
Yeah. Powerful stuff. We need to talk after this more about that. I think that is a incredible opportunity. Like you said, cash flow, cash is king.
Yeah,
I would like, in the little bit of time we have left here, I would love your perspective when you think about, I'm going to give you 3 charts.
okay.
And maybe if you can give me your perspective, which one you'd be most optimistic about
Like
over the
it.
next 6 months.
This is fun. Okay,
Yeah.
let's do it.
The first one is Facebook.
Okay.
Second is Apple.
Yep.
And third is Zillow.
Over the next 3 months.
Let's do 3 to 6 months.
Okay, 3 to 6 months. All right. So what I'll do is I'm going to draw out my thoughts on both.
Okay.
Or all 3. I'll kind of give you my perspective, because Facebook's going to absolutely murder earnings again. You have Instagram, you have WhatsApp, and of course you have the mothership. You have Oculus coming into the Christmas holiday season. From a growth perspective, Facebook is high. I mean, it hit 300. So we went from 150 to 300. I'm not the best at math, but I think that's a doubling. And
correct.
That's huge, man. I mean, that is that is massive town. So in generalities, my expectations on Facebook are going to look something like this. You're going to have pretty solid earnings, but we're going to chop around for a little bit longer before we go higher. So I would say next 6 months, best case, probably 320 on Facebook. Apple,
Okay.
love Apple, man. You're not going to find too many more people who love Apple more than I do. The challenge with Apple, very similar challenge that we had on Facebook, is you have a growth from 50. I know this is all post split, but it's 150%. After earnings, Apple added the equivalent of like 3 JP Morgans to their market cap just after earnings. I mean, it was like 700-800 billion dollars of market cap since earnings. So that tells me that it's really, really hot, but it's kind of over hot. It needs to kind of cool down and calm down a little bit. And based on some charting, I can see some slight weakness. So my expectations on Apple in the next 6 months are probably flat to up a little bit. Obviously, big fan of Apple long term. If you have this long term, it's going to go, it will go higher eventually. It just needs to cool down a little bit. So that's going to bring me to Zillow. And in my opinion, over the next 6 months, this will be the leader of those three. I'm actually a big proponent on Redfin and Zillow. I think that the real estate agent game in general is going to have massive disruptions and huge changes over the next decade. Because Gene, dude, I'm serious when I say this. Of all of my friends, probably 40% are real estate agents.
Okay.
Which is a lot.
They probably don't like to hear what you're going to say next, but
They
keep
don't.
going.
No, they're not huge fans of it. But it's like, man, every other agent of mostly anything, okay, travel agents, that got absolutely shredded to bits. Brokers, right? Agents of your money, more or less. That had a massive disruption. And there's so much you can do online. The houses and investment properties that I've purchased, I really didn't get them through a real estate agent. The real estate agent just helped me process the paperwork, and they helped me kind of do all the meetings and the scheduling and the all the things I had to get together to actually get the home.
They get paid handsomely for that.
They do, a little too handsomely. And so I think Zillow, Trulia, and Redfin are going to put some really, really massive dents in that industry longer term. So my thoughts on Zillow, the end is very soon on this one, and higher. It most likely will have a new all-time high in the next 6 months. Yeah, both Redfin and Zillow, great long-term buy opportunities in my opinion.
Great stuff.
That'll be the leader.
Man, I learned a lot. Thank you.
Heck yeah. Oh yeah, dude, my pleasure. Likewise, man. This was really fun. I know you're a big, I know my buddy Joel Alcon, he's one of my stock market mentors. I mean, he's a huge fan of yours. You're always on the Benzinga pre-market prep. So I just want to reach out to you and just let you know that I'm here, and man, you're welcome to connect with me anytime, but it was an honor and a privilege to have you here.
Love it. Thanks for having me. Let's do it again.
Absolutely. Thanks, Gene. Have a great day, man.
Bye-bye. Thank you.
All right. See you. Yeah, team. Cool. So again, you're the man, Gene Munster, trading legend, stock market royalty. Always love having new perspectives and ideas and thoughts and voices on the show. So for those who are watching, thank you for tuning in. I appreciate it. And again, we'll see if the squigs are right on those three stocks, both Facebook, Apple, and Zillow. So Gene, thanks for coming. Appreciate it.